What's going on, traders? Welcome back to my YouTube channel. It's been a while, and yes, I've been away. A lot's been happening. I got married, then I had a funeral, then I had another wedding, then I had a memorial. But it is what it is. Sometimes you need to take some rest just to recoup, re-energize, and come back stronger. So I just thought today I'll jump on, just do a little recording for you and just talk about some of my recent trades that I've been taking. Some of you may not resonate with my concepts and my approach to the markets, but I just want to share this with you because I think that this will be really, really good insight, or at least something for you to think about as you move forward into your own trading. So I've done the morning analysis this morning, and you probably would have realized that we've seen some strength from the dollar, from the pound, the euro, and anything against the dollar, should I say. You've probably identified that we've had a really, really sharp move to the upside on most pairs. We're now exhausting those moves, but where that's going, we'll soon find out. But besides the point, we've identified some weakness on the dollar. Now, that's been the case for a while. And if you've been able to jump into some trading opportunities, then, I just want to commend you for that, because here is just an example on Euro USD before I move on to my trades. Once we start to identify price failing to break structural highs, in the back of your mind, what you're thinking is, if we have this bullish move to the upside and price starts to take out these highs here, buyers are entering the markets and sellers are getting stopped out here. Now, I don't want to focus on stop hunts, etc., but you have to think of it this way. If the buyers are buying and sellers are planning to sell from this level, and we finally get a break above this level with either a candle close or at least a strong enough move to the upside, what are we expecting? Well, we're expecting sellers who are selling at resistance to be stopped out and for the buyers to continue on their buys or enter new positions. Once we see price failing to break above these highs here, what we're now looking at is a failure to break above. So this could then illustrate to us that buyers are now taking profits, bearish orders are stepping into the market, and what we need to do is confirm that by identifying strong momentum or body closes. Once price does this, what we're looking for then, traders, is targets to where we think price is going to come back to, and that's always going to be some of our major lows or major highs. Again, we had the same process here. Sellers were involved in the markets. If we were going to see this market go down, we're going to start to see price taking out some of these structural lows here, triggering new sell orders and potentially stop losses from buyers who are coming into the market. Here we have a level in the market where we're showing bullish momentum with a failure to break above. And what do? We want to mark that level to identify where price is failing to break above. And then what do we see? A bullish close, indicating bullish behavior and a very, very high chance that price will come back to these highs. Now, this process of trading is broken down into 3 steps. And the first steps you're going to be looking for when trading this approach is not a strategy. It is just simple concepts you need to understand. This is how the market moves. Is price failing to break above some key levels? If it is, there's a high chance that price will continue pushing bearish. But in order to see price pushing bearish, what do you need to see price do? You need to see price taking out structural lows. If price is in a downtrend and you see price making lower lows or lower highs, or in an uptrend making higher highs and higher lows, and then you start to see here multiple wick rejections, price then creating a resistance where it's failing to break above and break below, then you need to say to yourself, if price starts to break above, there's a very high chance we're going to continue pushing bullish. These are the scenarios you want to be looking for as a trader. If you're not looking to take trades on the reversals, then what you're looking for the market to do is simply create a trend that you can identify that is clear. Look for those multiple wick projections. And let's bring this back down. Look for the multiple wick rejections here, and then simply just wait for the momentum to start shifting. Take out the structural lows where the buyers are sitting. Look for the break close below to indicate sell sentiment here. And then what are you looking for? Just a retest and continuation. And these, my friends, are the patterns that you need for trading. There is not many more scenarios that you're going to need to be worried about when it comes to market structure and really keeping things simple. You're looking for areas where price is failing to break above. You're looking for where price is potentially going to exhaust/reverse, or you're looking for price to take out structural lower highs or higher lows. That is it. 3 scenarios. Take a note of this, take a screenshot. I'll even move the cursor for you, because this is the most important thing you're going to need as a structural-based, behavioral-based trader. What do I mean by that? Just how the market moves. So here we have this scenario. So keeping this in mind, let's say you could look at USD CAD. Some of my first trades that I took as of last week here, you probably can see this one here. This is on USD CAD. I believe this one was last week. Yeah, it was. Now, the overall sentiment of this market is pushing bearish. What I'm expecting in a bearish structure here is price to create lower lows and lower highs. And I'm not expecting price to take out a lower high. And I'm certainly not expecting price to take out the previous lower high. So in the scenario here, we have price creating those lower lows and those lower highs. We have a level here in the market where price is creating that lower high. Now, in a very strong push phase in any market structure, what we're expecting the market to do eventually is create an exhaustion. Why? Because that's how the market moves. You have your push phases, you have your exhaustion phases, and your push phases. Now, what I'm identifying here when I'm taking this trade is a couple of things. The downtrend. I'm next identifying the lower high, which is this information here. And after the lower high is formed as part of a downtrend, I'm expecting a new lower low. Now, we see that price creates an attempt to make a new lower low, but you can see it failed. Now, what do I mean by failed? Well, we did create a new low here. And the point is this. Once price breaks below this level and we make this low, just like the examples previously, I'm expecting buy stops to be taken and sell stops to be entered into the market. Now, this is not a concrete rule that once price breaks below or above, it must continue down, because that's where the stops or the sell orders or buy orders are sitting. Because if we knew where they were, then guess what? We'd all be rich. The point is the behavior illustrates that the new lower low should be formed. So we're expecting price to continue down. We have a failure and price what pushes back into structure. The next behavior that we see from this is a failure to make a new lower low and then bullish sentiment. Now, what I'm anticipating in the back of my mind based on what I see on the previous candle is bullish behavior. Once price starts to break above the current high, which in the lower time frames is a trend up with lower lows and lower highs, and now I'm expecting a new high to be formed in this instance. Okay, this is all this illustrates on the lower time frames. Weren't the greatest of drawings, but you get it. So that's what I did here, took the buy. Now, I'm anticipating price to continue pushing bullish into some of these areas here, where I can lock my trade in at break even, maybe take off some partials, but final profits are always going to be structural highs. Now, it doesn't necessarily mean I'm always going to hold this trade for a 1 to 5 back to some of these structural highs here, because I'm not. But in this instance, you can see the bullish momentum. I was happy to lock in whatever I locked in at the time, and then you let the rest run. Pretty simple trade. Where did this trade come from? Well, it came from the failure to make the new lows, because if the sell orders were triggered, we should have continued down. If the bullish stops were taken out, then guess what? Money's lost on this break of these lows. Once it starts to break back in and we have this bullish behavior, we have a sign of momentum. And then what we're looking for is a continuation of that momentum. Very simple trade here in USD CAD. Now, what do we have here? Well, we have a very similar trade. We have price creating higher highs and higher lows. We have a break of the structural high, and we have a new high formed. Now, if this market's going to continue pushing bullish, what's going to happen? We're going to break some of these structural highs, and we're going to continue pushing up. But if sellers are planning to step into the market, then what are they going to do? They're looking to sell from resistance or your supply and demand levels, which I'm not a fan of at all. So what am I waiting for? Well, I'm just going to wait patiently. If I'm not in on the buys for whatever reason, I'm not looking for sells. But what I am doing is I'm going to start to gather the information that I see that develops in front of me. If I now start to see price failing to continue pushing higher, and then we have a resistance level that's formed here by multiple wick rejections here and here, then I start to see price creating bearish candles to the downside. I now can gather that this is a very strong push phase in anticipation of an exhaustion included in that, we add confluence, which is the wick projections, where buyers probably stepped into the market a bit too late, or buyers are taking profits, sellers are stepping into the market. And how do we identify that? Strong momentum candles here and here. Look for the break of the structural lows to show signs of the momentum. And then what are we doing? We're looking for targets back at some of these major lows for break-even trades, management levels, and then final targets we're looking for in and around these levels here. Very simple concept, nothing too difficult here. We don't have to worry about who's doing what, what's doing what. It's just the same process, because after a push phase, we have an exhaustion, multiple wick rejections, bearish candle, close, and then you have it, Bob's your uncle. Now, gold trades, here we have it again. These were taken yesterday. We have a key level in the market where we see multiple wick rejections. If the trend is up, we expect price to break these highs and continue pushing bullish. If sellers are selling this and price does not break above, there's a sign that there's going to be a potential reversal or depletion in this market. And if buyers are not managing to break above because they're either taking profits or stepping out of the markets, then we're going to start to see sell pressure. What am I looking for here? I'm looking for wick rejections, indecisions, bearish candles to support why this is a good sell zone in the market. And then anticipating that if we start to see bearish candle closes, we'll start to see a continuation of that. And then in order for me to enter into this trade, I'm entering on the break of these structural lows. Why? On the lower time frames, what we start to develop before we even see it on the 15-minute is structural lower lows and lower highs, with price creating a failure to break above. And then now what I'm anticipating from a lower time frame perspective is a new downtrend to form. That's the reason why I entered this trade here. Now, looking at the buy that I took yesterday, which was a 1-to-2 risk reward ratio trade, here you can see a very strong bearish momentum move. What do we see? See huge wick rejection. Does that mean buyers are stepping into the market? Don't know, and I don't really care. But what I do know is after a very big push phase, there's a very high chance that we're going to correct that move. Everybody should know this. We don't need to do the mathematics here. After a very strong push phase, price is either going to retrace the candle's movement or we're going to have an exhaustion. It's very, very rare that you see price continue pushing bearish in this fashion without eventually exhausting. So I have that in the back of my mind. We're starting to now build a picture. Once price exhausts, we can see price attempt to continue to push lower. If we're going to push lower, we're going to push all the way back down into this wick here, and we're going to continue bearish, which we failed to do. We have a wick rejection indicating bearish sentiment failing, indicating bullish behavior. And what am I looking for? I'm looking for the next candle to turn bullish. If we break above these highs, anticipate that there's a very high chance we're going to come back to the bottom of the consolidation, or at least bare minimum, the top of the consolidation. And as you can see here, this is what's happened. Now, as I'm taking exhaustion trade, I'm not going to hold this for more than 1-to-2, in some instances 1-to-3. But after a 1-to-3 winner here and a 1-to-2, I'm calling it a day at 5R. But this is a reason for taking this trade. So we gather the wick rejection, the failure to continue to push back into this wick rejection indicating bearish depletion, and then bullish candle breaking above the high indicating bullish behavior in the market. A very, very simple trade. Here we have another trade idea on gold. As you can see this morning, identical to what we see here. We see a very strong push phase. And what are we looking for? This is a trade that members in my community took. Absolutely gorgeous trade here. This was a trade that I was going to take, but I decided to go for USD Swiss franc instead. And as you can see here, what do we expect the markets to do? Continue pushing bullish back into these structural highs. Why? We have the multiple wick rejections to break above the high, candles to turn bullish, break above, continue higher. There you go, Bob's your uncle. What do we have here? Same scenario, but we're not going to talk about that one. Let's take a look at my trade here on USD Swiss franc. Almost identical to everything that I've spoken about today. Actually, a pretty phenomenal trade here on USD Swiss franc. Pretty phenomenal trade. Okay, damn. So what are we seeing here? We're seeing price creating lower lows and lower highs. We see a level in the market where price is failing to break above. We have bullish behavior. Now, remember the examples I gave you earlier on. If we break close above, we're expecting buy orders to be triggered. We're expecting sell stops to be taken out, and we're expecting the market to continue pushing bullish. Simple market structure analysis, nothing special here. If price fails to continue pushing bullish and we start to see multiple wick rejections with bearish candle closes, what are we anticipating? We're anticipating price to tank. Why? Because after being in consolidation, we have a break above or break below, we expect a continuation, but with a failure and a bearish close, and then we have a break close below the previous candle, we expect the market to go down. Link it with the time that you're trading, which is pre-London open, and the volume of this bearish candle comparable to the candles to the left after this behavior, which is a breakout and break back in, you can now see we have this bearish move to the downside. Simple analysis. Now, my final trade that I'm currently in is on pound USD. I will be closing out this position actually right now, which is this buy here. I have a 4 pip stop loss, and I'm still holding this trade, but we've just hit a 1 to 3 on this on pound USD. Same process here. I will actually just close this trade out now. There is just no point me being in it. Damn. Okay, so close that trade out there. Simple analysis here. You can see we have a level in the market where price is failing to break below a very strong push phase, which we anticipate price to pull back. Multiple wick rejections in the market, a nice bullish close, break above a key level here in anticipation of a continuation up. So that's the process behind my trades for the last few days. Keep it simple, everybody. There's no reason to keep it or try for anything difficult here. You know, look for those key levels, look for where price is failing to break below or above, look for price to break close below key levels, look for those retests, and just be patient. 1 or 2 trades a day, close your trades early, walk away if it's not going in your direction, and it's just a matter of time before you hit those home runs. I thought I will share that with you. I think it's a nice introduction back just to share some thoughts behind my trades there. Hope you thoroughly enjoyed that. And if you did, just smash that like button for me, just so we can continue to share these videos around. Drop a comment. Let me know what you want to see in the near future here. Like and subscribe if you haven't already, if I've not already mentioned it. And until next time. Continue.